So we are talking about profitability ratios. These are investment ratios. In A level, you have some ratios that is related to dividend, which is more. Do you know about profitability ratios? What are profitability ratios?
The gross profit ratio, net profit ratio, and
And
ROC, the return.
ROC,
Yeah,
return on capital employed. What is a return on capital employed?
like
The return
how
you get
much
Return on capital employed. What do you mean by return on capital employed?
is how much money you made back with the use of your capital.
What is the return that you're getting on your capital employed? When I'm talking about return, what does it mean?
the payback that you get.
What is the payback actually called?
What?
The payback is actually called your profit.
Hmm.
Okay, tell me, when I am calculating return on capital employed, I want the profit that I am getting on the capital employed.
Yeah,
Okay, so I will take which profit? The profit that is before interest or the profit that is after interest?
Before.
Why? You have profit before interest minus interest. You have profit before tax. Yeah.
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 So why do you take this profit when you are calculating your return on capital employed? Tell me, is interest an operating expense?
No.
No,
What type of expense is interest?
financial cost,
What do you mean by finance cost?
like all the interests and all that come.
But what does
Bank.
it mean? It is
Just
the
bank.
cost that is associated with arranging money.
Hmm.
Yes. It's another source of funding.
So it is the cost that is associated with arranging money. It is the cost that is associated not with business operation. Yes. But
Yes.
when I want to know my profit on capital employed, I basically want to know how much profit I am getting, how much operating profit I am getting because of the money that I am employing in business. Yeah. So
Yeah.
finance cost is not your operating expense. It is not the expense to operate the business. That is the reason when we are calculating profit, you exclude the interest. So when I talk about return on capital employed, it is net profit before the interest. Are you with me?
Mhm.
When you talk about capital employed, how do you get the capital employed?
Profits from operation upon working capital.
I'm talking about capital employed.
Oh,
Your investors.
What is the meaning of capital employed?
Money gathered. Uh,
Ira, what is capital employed?
it's the total assets minus the
What
current
is the
liability.
meaning of it?
Like the remaining value of the business, like that. How
It
much is left?
means that the money used in business.
Yeah,
What is the money that you can use in the business?
the capital.
Capital is what funds? Own funds.
Yeah.
What other money you can use in your business?
Just what funds
Shareholders.
are.
You can use your own funds in business, correct?
Yeah.
Yeah.
Apart from owned fund, what other funds you can use in the business?
Shareholders funds and bank loans and everything.
Bank loans. Yes.
That means you can use your own funds in your business, or you can use the money from borrowings.
Yes.
Yeah.
Talking about borrowings, what does it mean?
Like bank loans.
Non-current liability.
Hmm.
So when I'm talking about capital employed, what is the thing that comes in capital employed?
Money
It
that
is
a business.
capital plus non-current liability.
Yeah.
When I am talking about capital employed, what do you mean by capital employed? Capital
Capital.
plus non-current liabilities.
Hmm.
When I am talking about capital, it will be your share capital plus reserves and surplus, because both of this belongs to the shareholders,
Yeah.
Yes.
plus your non-current liability. Are you with me?
Hmm.
Yes.
When I am talking about capital employed, it is shareholders' funds, that is your share capital, plus your reserves and surplus, plus your non-current liability. Are you with me?
Yeah.
Yes.
Are you sure you're with me?
Hmm.
Yes.
Okay, fine. So, what is the formula for return on capital employed?
Profit before interest divided by capital employed into 100.
Profit before interest and tax divided by capital employed into 100. What do you mean by the return on capital employed? What does this ratio measures?
The profitability.
The return on capital employed, it measures whether the firm can use its long-term funds efficiently in producing return.
Hmm.
Are you using your long-term funds efficiently to produce your returns or no? If your return on capital employed is more, that means you're using funds efficiently. Are you with me?
Yeah.
Yeah.
If your return on capital employed is less, what does this mean?
That you're not using your funds
Not
That
efficiently.
using.
you're not using funds efficiently. Are you with me?
Hmm.
Yeah.
Okay, I am giving you a sum. I hope you know the formula for return on capital employed.
Yeah.
Okay, I am giving you a sum. This is the sum over here. It's a worked example. Without looking at the marking scheme, I want you to calculate the return on capital employed for 2019. Okay, I am giving you time. Do it. We are talking about the return on capital employed. Return on capital employed means the net profit before interest and tax. So this is the net profit before interest and tax 1110. Yes, divided by the capital employed. So capital employed will be the shareholders funds. What is the shareholders funds, please?
Monsieur, this thing. Equity.
Shareholders funds is how much?
5,000.
5,000.
Okay. Will you take the this capital preference share capital?
Preference shares 5%. Yes.
Take all the capital.
Yeah.
Take all
So it would become how much?
5,000.
5,000.
5,000. And plus your non-current liability is 900. So it is 1.11 million divided by 5.9 million.
Yeah.
Okay, into 100.
Hmm.
It will become 18.8%. Are you with me?
Yeah.
Okay, fine. I want you to take this activity and find the gross profit margin, the net profit margin, and the return on capital employed. And I am waiting for you. The first thing is gross profit ratio. What is the formula for gross profit?
Monsieur, gross profit divided by revenue.
Gross profit over revenue into 100.
Yes.
Okay. And you want this for 2018 and 2019.
Yep.
For 2018, it would be 8,900
Divided by 44,800.
divided by 44,800 into 100. So it's coming up to how much?
19.86%.
Ira,
Yeah.
please answer.
Yeah. So
For 2019,
11,180 upon 52,620 into 100.
so it's coming up to
21.525.
21.25%.
24. Not what?
Okay, let's talk about net profit ratio. Net profit ratio will be how much?
4345
4345.
upon 44,800.
Okay, understand one thing. When you're paying dividends,
Hmm.
do you pay your dividends out of the profit? Think properly and tell me.
What much? You pay dividends out of profit?
Do you pay dividend out of profits?
Yes.
So that means your net profit is 4345 plus this net profit is 4345 plus this 180.
Yes, but why must?
Hmm?
But why must?
Think, I will give you time. So net profit ratio, net profit will be 4345.
Hmm.
This is after all your expenses, right?
Hmm.
Over revenue.
Into 100.
So it is coming up to how much?
9.70.
9 point?
70.
Okay, for 2019 it is 5464 over 52 over how much? 52,620, right?
Yeah.
Into 100. So it will be
Yeah.
how much?
10.8.
10.80 percentage. Okay. Now let's talk about return on capital employed. ROCE for 2018. Profit before interest before tax. How
43,
much?
4345.
4345 is after interest.
Profit before interest.
So where do we like minus the interest from?
See, 8,900 is the gross profit. Interest was 480 and 4345 is after interest. So you have net profit before interest and tax minus interest, you get net profit before tax.
Hmm.
Okay. So net profit before interest and tax, I don't know, but I know my net profit before tax. After interest before tax is 4345. Just digest this fact. It is after interest. This profit is after interest, but before tax. So interest is 480. So net profit before interest and tax will be how much?
How would we the
So you add 480 on your net profit
You'll
after
add
rent.
480, na? You want this part, right?
but where did you get 480 from?
Interest
might-
payable.
Is your interest.
Acha, okay, the interest is given over there.
Okay.
Yeah.
So net profit before interest and tax will be how much?
4825.
345 plus 480.
So 4825.
4825.
Yeah.
Capital employed. Where do you get the capital employed from?
16,400. Is your ordinary shares, reserves, and the non-current liability.
5,700 plus 4,700 plus 6,000,
16,400. Yes.
16,400.
Yep.
Okay, 16,400.
29.4.
Hmm?
29.4%.
Into 100. So this is how much percent? 29.42%.
Hmm.
Amount for 2019, it will be how much?
5464
5464
plus
plus
130
130 divided by
17,000.
this total is how much? 17,000 divided by 17,000 into 100. So this is 32.91%. I hope it is done.
Yeah.
Yep.
Okay. When we're talking about our capital gearing ratio, it tells us that in your total capital employed, when you're talking about total capital employed, means what?
Your the share capital.
When you're talking about total capital employed means what? Your share capital plus your
Your
non-current liability. Okay.
res-
Say that in your total capital, what is the capital that carries some fixed cost with it? Say if your total capital is 100 and in this 100, 80% of your capital carries some fixed costs. That means you are at a very high risk. Your gearing is too much. Your capital is geared with a lot of interest charges, a lot of fixed costs. If your total capital is 100, and from that 100, your total capital employed, I'm talking. So if your total capital employed is 100, and out of which 80 is carrying some fixed charges associated with it, that means you have to pay irrespective whether you're earning a profit or not. That is called fixed cost capital. So if from your total capital 80% of your capital carries some fixed charges towards it, that means your gearing is high, your capital is geared with a lot of interest expenses, a lot of expenses. That means you're at a very risky position. Okay. So if your gearing percentage is higher, that means you are at a risky position. If your gearing percentage is lower, that means you can still borrow money and increase your capital employed. Are you with me?
yes.
So when I'm talking about capital gearing ratio, so when I'm talking about the gearing percentage, the formula for gearing percentage is fixed cost capital upon total capital employed into 100. Are you with me?
Yes.
So when I'm talking about fixed cost capital, what is the capital that carries a fixed cost? The capital that carries a fixed cost is usually your debentures, your bank loan, your preference capital. If you see next to the preference capital, this percentage is mentioned.
Yes.
So if a percentage is mentioned, that means 6% dividend must be given to your preference shareholders, whether you earn a profit or not. So just keeping this in mind, write the meaning of the gearing ratio, write the formula for the gearing ratio, and calculate the gearing percentage for me. What is the formula for gearing percentage?
Fixed cost capital divided by total capital employed.
Into 100. Do that. So you do the analysis. What is the return on capital employed over here? Did you calculate that?
The return on capital employed? No, miss.
It was the same sum. The return on capital employed is 10.56%. Okay. If I want to comment on the return on capital employed, I need somewhere, some base from where I can compare.
Yeah.
Either compare it with the last year, next year. Just having a return on capital employed is not too good. Okay. You just can't comment it's good or bad. Say last year you had made 13% ROC, then this year it is wrong. Your industry average is 5% and you are getting 10%, then it is good.
Hmm.
Okay. So for return on capital employed, if you want any comment, you need to have a base. Now we talk about the gearing ratio. You see, your gearing percentage is how much? 43.46%. Yes.
Yeah.
Sahil, yes.
Yes, miss.
That means in your total capital employed, your gearing is 43.46%. That means your borrowed fund is less than 50%. Yes.
Yeah.
Your fixed cost capital is less than 50%. That means you still have a scope of approximately 6 point something percent to increase the fixed cost capital in the future. 50% capital without fixed cost and 50% capital with fixed cost is okay. Are you with me? But
Six
if
Hmm.
point.
your fixed cost capital increases 50%, that means you are totally geared up.
Yeah.
Hmm.
So here the gearing ratio is slightly low as it is below 15%. So it gives it scope to increase the borrowings in the future. Are you with me?
Yes.
Yeah.
Are you with me?
Hmm.
Now we are talking about investment ratios. Gearing ratios is perfect, right?
Yeah.
Yeah.
Okay. Now let's talk about investment ratio. The first investment ratio is earning per share ratio. Do you know the meaning of earning per share?
Miss, yeah, miss. How much you earn per share you sell
How
or
much
issue?
your, sorry?
Perfect.
How much money, how much profit you make off of each share issued?
Okay. How much profit you're making for each shares issued? Or you are actually not coming up to the main thing. Okay. What is the profit that your each shareholder will get? Which shareholder? Your every ordinary shareholder is going to earn how much profit? Every shareholder is going to get how much money per share? Okay. Say, for example, you are earning 1000 dirhams or 1000 pounds. From this, your preference shareholders is your fixed cost capital and they are going to take away 200 pounds. So for your ordinary shareholders, how much money is left with you? 800 pound, right?
Yeah.
Miss,
So
could you
your,
repeat it?
okay. Say your net profit after interest, after tax is 1000.
Yeah.
But from the net profit, first dividend has to be given to your preference shareholder.
Yeah.
So what you give to your preference shareholder has to go away. Earning per share is never
Hmm.
calculated for preference shareholders because preference shareholders are those people who are going to get a fixed rate of dividend irrespective of whether there is profit or loss.
Yeah.
So I want to calculate my earning per share. So it will always be for the ordinary shares. So every ordinary shareholder will get how much dividend. This is what I am calculating in the earning per share. Are you with
Hmm.
me?
Yeah.
Yep.
So how much dividend are my ordinary shareholders going to get? From
800.
the net profit
minus.
after interest, after tax, when I will minus my preference share dividend. That is the amount that I can distribute to my ordinary shareholders.
800.
Amount that can be distributed to my ordinary shareholders. So, net profit after interest, after tax, minus preference dividend divided by the number of ordinary shares is issued, I will get my earning per share. Are you
Yep.
with me?
Yeah.
Okay. If the earning per share increases, what does this mean?
It's you're earning more profit from each share.
You're earning more profit from each share, or I could say, if the earning per share increases, it means that the financial performance of the company is improving.
Hmm.
Okay, it is the quickest way of assessing the financial performance of the company. Are you with me?
Yes.
Is it necessary that what I earn is what I pay?
Performance?
Is it necessary that whatever I earn, I pay?
No.
No. So can I say earning per share is not equal to the dividend per share?
Yeah.
Yeah,
Yeah.
think properly and tell me. I can earn more money. My
Then
each shareholder can deserve more money. But what I pay out as dividend could be something which is totally different from the earning.
yeah.
Yeah. So the formula for earning per share is how much? What is the formula for EPS?
It's net profit after tax subtracted with your preference share
About
divided by number of
number of
issued.
issues.
Number of ordinary shares issued. But when I talk about dividend per share, what would be the formula for it?
Total ordinary share dividend
The
paid upon
dividend paid divided by the ordinary shares
income.
issued.
Hmm.
Okay. Earning per share and dividend per share are two separate things. Earning per share tells me the financial performance of the company. Dividend per share tells me how much dividend I am actually paying to the shareholder. Are you with me?
Hmm.
So, dividend per share tells the amount of profit that has been distributed to the ordinary shareholders. I want you to write this formula once and then I will take you to PE ratio. Try to write it without seeing it. When I
Which is
talk
not
about the price earning ratio, it means the market price over share divided by the earning per share. So price earning ratio basically tells me whether the shares which are being sold in the market are expensive or not. Okay, if the price for what I am paying, my earnings is less. Okay, the market price is more and the earnings is less. That means the price is expensive in the market. That means it is overpriced. Okay, so a high price earning ratio means the market price is higher and earning is less. That means your share is overpriced in the market. Don't invest over here. But a lower price earning ratio, that means the price is less and the earning is more. That means you should invest over here. Are you with me?
yeah.
So the price earning ratio, it depends totally on the industry. The formula for this is market price per share divided by the earning per share. And the answer that you get is in times. Are you with me?
Yes.
Then there is another formula that is a dividend yield ratio and dividend cover ratio. Before discussing this formula, I want you to first calculate the sums that are there down. In order to do this sum, which is in your worked example, you just have to calculate the ratios and the unit of measurement used. Price earning ratio will be in what? Times.
Times.
Gearing will be percentage. Return on capital will be percentage. Dividend per share would be per share. Dividend yield would be percentage.
Yeah.
And dividend cover would be times. With me?
Yeah.
Do this sum. Now tell me what is the dividend yield ratio? Can you tell me what is dividend yield ratio?
Miss, the amount of return you get on the just an investment.
Okay. So if your market price per share is 100 and the dividend is 10, so what is your dividend yield ratio? It is 10%.
Yeah.
So if your shareholder is seeking income rather than capital growth, he wants to see that I am putting this much. What is the percentage I'm going to get back? Okay. He says if
Okay.
I'm putting 100, am I going to get 10% back? If he gets 10% back, he is happy. And if the shareholder is looking at the money that he is going to get back on the amount invested, I'm repeating again. If your shareholder is looking at the money that he is going to get back on the amount invested, he will look at the dividend yield ratio. Dividend yield ratio is expressed as a percentage. Okay. So the dividend yield ratio is dividend per share divided by the market price per share into 100. Let's talk about dividend cover. What does it dividend cover tells you?
Miss, how many times you can
How
pay the
many times the profits can be used to pay the dividend? Or how many times the dividend paid can be paid from the profits that you're getting? But which profit you're looking at? Profit after preference dividend.
Okay.
So if you have a higher dividend cover ratio, that means your profit can pay dividends X, Y, Z number of times. Are you with me?
Yes.
Okay, fine. So we've done this sum where we had to find the gearing percentage first. What is the formula for gearing percentage?
Fixed cost capital divided by total capital employed.
So what is your fixed cost capital?
For me, it was 1 million plus 4250.
This preference shares, this
Yeah, miss.
8% debentures and 3% bank loan.
Yeah, 7250.
And capital employed would be
17
issued share,
million.
issued preference shares, debentures, bank loan, and the reserves.
That totals up to 17,975,000.
Okay. So your gearing percentage would be your fixed cost capital divided by capital employed into 100 is 40.33%.
Yes.
Return on capital employed, what is the formula?
Profit before interest divided by total capital employed.
Into
100.
net profit before interest is already given to you.
Yeah.
Capital employed you've already found out
Yes.
into
Gives
100.
you 6.119%.
Earning per share. How do you get earning per share?
Once you subtract this thing, your profit after tax with your preference share,
Yeah.
and then divide it with the number of issued shares, which is
Net
1 million.
profit after interest and tax
Yeah.
minus the preference share dividend.
Yeah,
How do you get the preference share dividend?
6% of 1 million.
Okay. Divided by how much?
10 million.
Okay.
The issued ordinary shares.
Yeah. Okay, fine. So you get your what earning per share?
Yes.
Earning per share is how much?
0.044.
0.044 per share. Price earning ratio. So
Yeah,
market price per share divided by the earning per share. Market price is given to you.
1.05
Yeah, P
divided by 0.
is 2.23.86 times. Dividend per share. What is the formula for it?
Dividend per share is your or ordinary shares dividend divided by number of ordinary shares issued,
Okay.
which
So,
is
hmm,
your 340,
how do you get the dividend paid?
as it's mentioned.
And ordinary shares issued is over here.
10 million, yes.
So your dividend per share is how much? Dividend yield ratio.
Dividend per share divided by market price.
It is as a
So
percentage.
yeah,
Okay, come on, tell me what does the gearing ratio tell you? You have a gearing ratio of 40.33%.
yeah, it tells you about your borrowing mass. So if it's below 50%, uh, you have the ability to borrow additional funds.
You still have the ability to borrow additional funds.
Yes, if it's below
Okay.
50%.
Okay. So ideal ratio is how much?
Ideal ratio
Yeah.
50,
Hmm?
like 2 to 1, 2 is to 1.
Sorry?
If it,
50% is the ideal ratio.
yeah, 50%. Yes.
Okay, fine. So your gearing ratio is 40.33%. That means what?
It's significantly below 50%, so you can borrow more funds.
Okay. Come on. ROC
Non capital employed.
6.12%.
Yeah.
It is good because your banks is giving how much percent?
3%.
So if you're taking bank loan, you're giving 3%. Okay.
Mm,
That means you are earning more.
yeah,
Means
more.
you're earning more. Okay, go ahead. I want you to write comments on everything and then we can discuss.
Okay.
So the earning per share is 0.44.
Yeah.
Okay. You cannot comment anything on this earning per share because you don't know about the previous year. You don't have any additional information about the market.
Yeah.
Price earning ratio is 23.6 times.
Yeah.
That means compared to the market price, what you're going to earn is 23.6 times. Okay. That
Yeah.
means your market has confidence in the company. That is why the company can charge 23.6 times more market price compared to its earning. The market price is 23.6 times more than the earnings. Dividend per share. Now, you cannot comment on this because it depends upon your performance, the dividend that the shareholders are getting in the market outside, what is the return on investment. Okay. Ideal dividend per share should keep the shareholders happy. Dividend
Yeah.
yield ratio, what does it tell you?
As it gives you your return on investment, like how much the shareholders would receive.
How much dividend the shareholders are going to receive based on what they are paying.
Yeah.
So the shareholders are getting 3.24%. of the market price
Yeah.
on their investment. Dividend cover. Profits can pay dividend only 1.5 times. Ideally, you should be able to pay twice.
2 times, yes.
Okay, so future dividends can be lower. Okay, here you cannot give a very clear judgment on the overall performance of the company because I do not have information about the previous year and about the other companies in the market.
Hmm.
But it looks like, ideally, it looks like this is a good company because the return on investment is also there. Capital is not geared too much. Dividend is also like 3.24% based on the market price. And
Dividends per
the
share.
market has confidence on the company.
Yeah.
So it looks like an attractive investment.
Yeah.
Now, what you can do is you can try this activity. And after this, I have given you questions from the past papers,
Yeah.
that full booklet. You can
Yeah.
finish